This is the fourth episode of Hawaii Real Estate News Now. We made it this far. Are you there, Dean?
I'm here.
All right, a little bit of preview of what we got here, some market stats, some Hawaii news, and we'll talk a little bit about some topics in the investor corner. I've got the interest rate report and a little topic on Social Security. When's that going away? And before we get going, here's a legal disclaimer. You guys can read that later on. But introducing Dean Ueda. How's it going?
Very good, Lane. How about you?
Good. We're putting this up on YouTube, so if you guys want to check out the old episodes or some other resource videos, another good stuff on there. But Dean's the realtor in the house. You guys can give him a call there. But yeah, what's been happening in the market recently, Dean?
Yeah, it's been a interesting May. We have a little bit of a lag, as you know. HBR sends out their information after the close. So right now we're going to talk to May statistics. So for median single family prices, we saw an increase of 4% to 778,000. Also increasing were the condo prices by 6% to 430,000. On the other hand, on the closed sales, we see a decrease of 8% from last year of 332 units for single family and a decrease of 8% for median condo prices of 495.
So that's year over year, right? Not like last month.
Exactly. So I think was that the first or second episode we talked about median and also how HBR reports to the same month last year. So
prices steadily moving up. What is the closed sales? What does that really mean? Like saying it's going down from last year? Is that like kind of indicative of inventory or something?
I think that's why I said it's interesting, because we have, it's kind of going the opposite way. Prices going up, yet the closed sales monthly are going down. So that's kind of interesting. I'm thinking could have something to do with the interest rates, possibly. And also this is a little. They're saying that this year is a little bit slower. They're hoping for a late summer peak this year. That's what Honolulu realtors were saying. So it could be due to the little spike in the interest rates this year, possibly.
Okay.
And then, days on market, we see there was the same for single family, but it was a little bit of an increase on the condo prices. Yeah, and I think we had mentioned before that sometimes the condo statistics are more of a leading indicator. Like things occur to the condo market rather than, and with the single family to follow.
Right. So maybe showing a little bit of softness in the market, but the prices keep going up.
Possibly, yeah. So, I mean, it's tough because it's, in Oahu we have such a limited supply of inventory, right?
Right, so, right. I mean, with only 300 houses sold, I mean, you probably know more than people between us.
Yeah, I know, seriously, right? So then, so we go to the next slide, and then now I wanted to talk about the new listings and look to see if there's some trends here. So for single family, we see it going from March at 415. We see it going up to 523. So that's kind of promising for the buyers. More inventory coming up on the market. On the condo side, it's kind of a little bit different. It kind of spikes a little bit in April, then drops down in May, back down in May. So should be interesting to see what June's numbers come out in a few weeks.
Yeah, it's something I'm looking at. Like, you're getting about 500 listings, and on this side you've got about 300 of them closing. So that's kind of like,
little more stuff coming on market.
Yeah, three out of every 5 of these things are closing. Maybe 2 out of 5 are just sitting out there.
Yeah.
The sellers aren't really that desperate to sell it.
Yep.
Nor should they be. It's a seller's market.
Exactly. Yep. So next, I wanted to talk to to the recent real estate in the news. So I think for the last 8 weeks, I think May 3rd is when um, Kilauea started erupting. So some news popping up about the Big Island eruptions. Pacific Business News reported, quote, that lava wipes out nearly 375 million in Hawaii real estate market. So basically, the Hawaii County zeroed out all of those properties' values and said that they don't have to pay any real property tax for 2018.
Oh, that's kind
Uh,
of them.
yeah, it is. And the funny thing is that part of the article was saying that some of the owners were trying to fight it or complain, and I was trying to figure out why, and I don't know. I was thinking maybe it could be due to their loans. Maybe, I'm not sure. It didn't say why, but I was yeah. What do you think?
I mean, I know like when houses go like that, the property owner can kind of call it a casualty. I mean, I had a yet yesterday I had a flood on our apartment in Iowa, and
Cool.
you know, in a way, it's kind of good because if you're going to go and rehab the property anyway, well, you kind of got free money. But you can on stuff like this, you can kind of claim it as a casualty, kind of like how they say when you go and lose a lot of money in Vegas, if you lose enough, you can write it off.
Yeah, yeah.
It's kind of the same thing.
Mm-mm-mm.
Something to do with that, maybe.
Yeah, that'd be interesting. And then yeah, Hawaii News Now. I think the most I peaked today as of June 2nd, and they said 678 homes have been destroyed. And last week, Hawaii News Now also reported that FEMA was dispersing a little over 100K in Fed monies. But I mean that the assistance helps, but if I mean how far can 100K go over 678 homes, right?
Yeah, I mean, I work for the government, and that's going to barely get $5 out there.
Yeah. So gotta feel for our neighbors up in the Big Island.
Yeah, and I think it is affecting like Waikiki too. I mean, a lot of tourists are they get confused that with Hawaii and
Yeah.
Oahu.
Well, they're saying there's like a lot of press inaccuracies going out to on the press regarding um, the the implications or the how much of a impact the volcano is having across the island or even across the state. Yeah. So
Right.
yeah, to your point, it most definitely is affecting tourism, I think. Okay. So some other news that I thought was pretty interesting, and I don't know if you saw this, Lane, but I think this was last week that HUD came out with a report that defined low income for 2018 for family four at 993,300 for Oahu, and and also here's the numbers for you can see from Maui 75 little over 75,000, Big Island 63,000, and Kauai about 71,000. And just for the heck of it, I threw in San Fran and Alabama just to show the opposite ends of the spectrum, right? Um, as well as stating the median income in Hawaii is at 96,000. So it's that was a kind of shocker to me. I don't know.
Yeah, I
Eh,
mean, it just goes to show like Hawaii is very a skewed um economy. You got the very rich and then the locals, which is probably below this median.
yeah. Well, you're saying that the bifurcation of the rich and the poor is just getting higher, right? Is the middle class is kind of going away, right?
Right, right.
So even the inventory popping up in Kaka'ako, they've been earmarking a certain percentage. With the developers, they're saying that it has to be middle income, and when you see how their definition of middle income is like, wow, that's pretty high, and wasn't in my perspective middle income. I didn't think that's what was the range.
Yeah, I mean, I was actually trying to apply for one of the lotteries like last week. I forgot which one it was called, like
As-
Wailaike or something like that.
I think Ali just came out
Yeah,
recently.
Ali. That was the
Okay.
one. But yeah, their restrictions were really strong.
Yeah. Yeah.
You really couldn't fudge it like how you could before.
Yeah.
Couldn't
Yeah.
just pay some guy to go stand in line for you.
Right. And then after that, there's a lot of not contingencies, but if and when you do sell, there's like a big recapture and a penalty, if you want to call it, for all the potential gains.
Right. They had like a restriction on how long you could hold it,
Yeah,
and then in addition to the income requirements and net worth requirements.
yeah. It's challenging, and then if you look at that Ali complex, I mean that was some pretty tiny tiny inventory that they're selling.
Yeah, I mean they're just doing it because it's a condition of their permit. I mean,
Yeah, exactly.
yeah.
Yeah, cool. Okay, and I think up until this point, we really haven't talked to investors much, so that's why I wanted to throw out this question, and maybe um, Lane, if you wanted to start, but the question would is it possible to purchase a positive cash flow investment in Hawaii using leverage? So
Yes, so I mean, when we're talking leverage, you're talking about like a non-owner occupied 80% loan to value loan, so
yeah,
20% down payment. I'm gonna probably say no in Hawaii because Hawaii is a primary market, and typically in primary markets like Seattle, Los Angeles, New York, Boston, um, Miami, Florida, to name a few. These are the places where there's a lot of money, and you're just not gonna find the rent to value ratios necessary. You're not gonna see that 1% rent to value ratio or higher. And I'll define that for the folks who don't know what that is. You take the monthly rent, you divide it by the purchase price. So in a lot of places across America, I know it sounds really crazy, but they actually think we're crazy for paying the prices that we do.
yeah,
You can buy a $100,000 house for $1,000 a month rent. So you can do the math: $1,000 a month divided by 100,000. That's 1%. Obviously, here in Hawaii, like what is a Milani house these days? Like 800 grand.
and I mean I think the median's a little lower than that, in
Yes.
seven.
Yeah, so I'll call it 600 just to make the math easy. But to rent a house like that's what 3 grand a month. So you go,
Yeah, maybe three bedroom or
yeah,
four bedroom.
yeah. So 3 grand divided by 600,000. That's 0.5% rent to value ratio.
Yeah,
So that's you don't have the face here, but that's the no bueno.
yeah.
Well, usually, I don't know what your thoughts, but I feel like anywhere from like 0.8 to 1% rent to value ratio is kind of the threshold for if you're cash flow or not. And
Yeah. And unless, yeah, I mean, the key here is like I said, the question that was posed was using leverage. So, like to your point, if anything you put payoff in cash, you'll cash flow. But yeah, if you use it like by your definition, if you're going with the 20%, 25% maybe, then yeah, my answer would be yes, but it would be challenging to cash flow in Hawaii with using leverage. And it would be you would have to be willing to have a take on a little bit of riskier of a tenant base and be out more on the west side. Yeah. So I think both you and I, Lane, are invested in the mainland. Yeah. And I do have some investments here in Hawaii. So and so far so good. But yeah, I mean, if people ever want to talk about that, or I mean, you know, pursue investing in Hawaii because maybe they're too scared to invest outside of the islands, then I would urge them to give me a call, and we can talk to them to see what their needs are. That
yeah,
could
and
be,
yeah, and I think whatever you do, you got to get started investing. I mean,
yeah.
buying your house is one thing, but you got to get rental income coming in, and whatever you need. I mean, not everybody can go out and go buy a mainland property sight unseen like how you do, Dean. But
Hey, I have my controls and my checks and balances, Lane.
yeah. But I mean, whatever gets you started, right? And if it's a property that's barely cash flowing, or maybe losing couple $100 a month, but crossing your fingers that appreciation will get you there. Then yeah, do it in Hawaii, but try and make sure the numbers are at least close there.
Yep, agreed. Yep, that's true. I've helped a few clients who weren't looking necessarily for the cash flow, but maybe just for that break even. And then, like you said, happy to be invested a stone throws away from their place and comfortable in their neighborhood, but just having money to park somewhere and looking for that appreciation play. So yeah,
Yeah.
okay. And,
So, if you guys don't know who I am, you guys can check out the investment podcast I have at Simple Passive Cash Flow, found on YouTube, um, iTunes, Google Play. I finally got them on all of them. But
cool.
if you guys are interested in joining our investment club, go to ReiAloha on Facebook and the meetup page. And if you guys are interested in my book, text ebook to 587-317-6099. That's at free download there. But I'm going to talk about some of the interest rates that's been having recently. Some of the interest rates. It kind of, people geek out on this stuff, and I think people watch it a little bit too closely. But in the last month or so, kind of bounced off the bottom a little bit and sort of rebounding a little bit. But we're still talking about like a quarter of a point. I mean, it really is pretty negligible in the grand scheme of things.
Yeah.
Um, you know, I think you're gonna see it. Yeah, like I said, a quarter of a point. And this chart here is kind of the bond prices, which kind of directly correlates with what you're paying, for a mortgage. Next topic here is Social Security. Saw a cool article that kind of answered the question. Well, everybody says Social Security is not going to be there, which is right, but it'll be here supposedly to 2030. So this chart kind of shows the costs are going up, and the income are going up, and that yellow line there is kind of the composite, which is showing that the balance in the federal retirement system is kind of going kaput by 2030. So again, you got to build your own retirement, folks. And one of those ways is buying hard assets like real estate. Yep, 2030 seems to be the end of the gravy train.
Wow.
But I think that's all we had today. My email address is lane@simplepassivecashflow.com. If you guys want to get a hold of Dean Weta at Gmail, call or text 808-228-8209 if you want to buy or sell a house. And Dean doesn't really sugarcoat it like how other realtors do, I think. He'll
Oh,
tell you
not at
like
all.
how it is. And any suggestion, questions, or topics, let us know, and we'll see you guys next time.